Hey everyone, welcome back to another episode of Market Monocle. This is episode 6, and in this episode, we'll be going over a few important updates on HITID and what it means to you as an investor or a prospective investor. If you're tired of videos and articles rehashing company press releases, then you've come to the right place. I've got lots of new things to share that nobody seems to be talking about. If you're new to the channel, Market Monocle is dedicated to finding ways to make you more money out of the stock markets, and we provide research that is typically not found on any other channel. Let's get right into it. Just a quick recap on the things that have happened since my last video on HITID roughly a month ago. A lot of positive things have happened since then, and actually most took place in the last 2 weeks. On May 10th, the company completed a very important acquisition that, judging by online comments and the share price reaction, many have underestimated. Then on May 13th, the company announced and completed a 15-to-1 reverse split, which made the company's share price significantly higher than the minimum $2 to $4 requirement by NASDAQ. The company is now only waiting on final approvals before being uplisted. On May 18th, the cannabis ETF ticker symbol THCX bought 351,000 shares of Hightide, which is definitely a positive sign. But the share price didn't react positively to this news because on the same day, a 15 million Canadian dollar bought deal public offering was announced, and this was subsequently upsized to 20 million Canadian dollars. Alright, so let's first talk about the FAB CBD acquisition. Excluding the merger with Meta, this transaction is bigger than HITID's previous acquisitions like Smoke Cartel and Grass City, which were both less than $10 million. FAB CBD is valued at 25.8 million Canadian dollars, but HITID is only acquiring 80% of it, which is 20.6 million Canadian dollars. 12.6 million was paid in cash, with the rest of the 8 million in shares. FAB CBD creates and sells a range of CBD products, including oil, creams, gummies, lotions, pet treats. If you don't know what CBD is, I encourage you to read up on it. But the important thing to know is that for many countries, including the US, CBD is legal, as it is derived from hemp, which was effectively made legal with the Farm Bill of 2018. CBD also does not contain sufficient amounts of the chemical THC that is responsible to make you high. The company was founded by Joshua Delaney in 2017, and he appears to be an experienced entrepreneur, as he has started over 10 companies. FAB CBD also appears to be a very fast-growing company, having doubled revenues for 3 years in a row. Revenue in 2020 was $10.8 million US dollars. Another thing that I really like about it is that it is highly profitable, and hence it makes the acquisition very accretive. The EBITDA margins of FAB CBD is 40% in 2020 versus HITID's low to mid-teens EBITDA margins. Another interesting thing that is often overlooked is that prior to HITID's acquisition, Josh is FAB CBD's founder and sole shareholder. This means that he did not take any outside money or raise huge lumps of cash to grow. In my opinion, this is evidence that the quality of growth at FAB CBD is extraordinarily high, and that it has strong cash flows to support its operations. Overall, the FAB CBD acquisition looks like a fantastic transaction. I would even go as far as saying that this acquisition is probably the best HITID has done yet, excluding the Meta merger. Clearly, the acquisition is not only earnings and margin accretive, FAB CBD's growth philosophy is also very much in line with HITID's profit-driven mindset. It is this similarity in the management philosophy is what reportedly helped FAB CBD agree to sell to HITID. Because trust me, with FAB CBD's kind of numbers and the lack of third-party investors, there's definitely a lot of bankers knocking on their doors. Perhaps the most important aspect of the acquisition is that it accelerates HITID's exposure to the US market, which is key for a valuation re-rating. Unlike many other Canadian cannabis companies that are just sitting back and waiting for a breakthrough in US legalization, HITID recognized that there are other avenues to capture growth in the meantime, such as selling accessories and peripheral products. This acquisition enhances HITID's avenues to generate revenue in the United States by now selling another legal cannabis-related product, CBD. Judging by many online comments, I think many people have underestimated the size of this opportunity. In fact, Omar Khan, HITID's recently appointed Senior Vice President of Corporate and Public Affairs, wrote an article on this last week in thegrowthup.com that talks precisely about this. He wrote that hemp-derived CBD sales in the US is forecasted to rise to USD 6.8 billion in 2021 versus the USD 2.6 billion in sales of total Canadian cannabis sales across all formulations in 2020. If you still haven't recognized the significance of this, I will spell it out for you once more. The size of legal US CBD market is close to 3 times larger than the size of the entire Canadian cannabis market. In terms of pros and cons of FAB CBD itself, it is too early to judge how good the company actually is relative to other CBD companies. But I'll say that FAB CBD should have gained market share in 2020, as data firm Nielsen estimated that the US CBD market grew somewhere around 50% last year, while FAB CBD have doubled in revenues. I tried to figure out what made the company successful, and my conclusion, it is threefold. One, it appears that they take customer service very seriously. Two, it has a very strong social media presence and utilizes professional ad studios to create viral marketing. And three, it is committed to high transparency. For instance, all of its products are tested by third-party firm ProVerdi Labs. Of course, objectively, there is uncertainty whether this type of growth will continue after acquisition, as I've seen way too often that the growth of companies falters immediately after an acquisition. The two risks I see right now are, one, the CBD market is still super fragmented and is also growing just very quickly organically. So I'm not sure if the success of FAB CBD is really the company's own doing, or is it just sheer market growth. And number two, there is a key person risk. The reason I highlighted that the founder of FAB CBD is a serial entrepreneur on the previous page is that the sale of this company could simply just be an exit for him, and he may very well leave the company when he has another business idea to start. Alright, moving on to the more important event, which is the NASDAQ listing. If you've been watching my channel, you'll know that I consider this to be a very important catalyst. Perhaps the only other catalyst that is more important to this is the official federal legalization of the US cannabis market. From the perspective of an investor, in episode 5 I've gone in detail why buying uplistings could be a profitable strategy. I encourage you to watch it. Although in that video I've shown that to make the most money, it is best to buy the stock a few months before the uplisting date, which is probably too late right now if you haven't bought into HITide yet. I also show that even if you buy the stock on uplisting day and hold onto it for 1 year, history shows that you can still make an over 30% gain. Of course, that's only a historical average, so it's not for certain, but I do like my chances with HITide given that it is in a fast-growing market like cannabis. But it is important to note that the timing of the uplisting is still not yet confirmed because NASDAQ has yet to give the final approvals, but it should be within the next 2 to 3 weeks since the reverse split has already taken place. Alright, to understand why uplisting can lift the share price over time, I'll give you 6 reasons. The first is that it lowers the cost of capital for the company. This is both in the form of equity and debt issuances. There are also 2 ways to looking at this. One is more practical, while the other is more theoretical. The practical one is that being listed on the NASDAQ reduces the perceived risk of the company, which in turn reduces, for example, the interest cost of loans from banks if the need arises. If you don't believe me, take a look at the companies who uplisted and look at their effective interest rates for bank loans before and after uplisting. The other more theoretical reason is that a reduction in risks mean that investors can use a lower discount rate to discount its future cash flows, and in turn increases the valuation of the company. The second reason an uplisting would boost the share price is that it provides significantly more access to major and so-called high-quality investors. By this, I mean generally having more institutional investors buying the stock. For this, I'll just show you the effect on charts before and after uplistings based on what happened at other cannabis stocks. My all-time favorite is GrowGen, which again is the poster child of success in uplistings. By just looking at this chart, I probably don't have to tell you when the company uplisted to the NASDAQ from the OTC. Just look for that spike in institutional ownership percentages. Now GrowGen has a lot of enviable success, so I'll show you another example. Here's a chart for Village Farms International. Notice that the company went from barely having 10 institutional investors to now over 100. Then here's a chart for Curaleaf, the largest cannabis company in the US by sales, but has not yet uplisted, so is still trading on the OTC. Despite being the largest company, it only has around 30 institutional investors. And in terms of percentage of shares outstanding held by institutional investors, it is less than 2% versus the 30 to 50% for GrowGen and Village Farms. Now here's a chart for Hitid, which I have to admit is pretty sad. Less than 5 institutional investors that make up less than 0.6% of total outstanding shares. And folks, this chart also explains why this stock has been so super volatile, which many of you have been complaining about, and why it reacts so much to news like dilutive fundraisings and etc. Nonetheless, once it uplists, I think the chart will look a lot more like the first two charts, which would make Hitid much less sad. Hey, at this point, if you're still watching, do consider subscribing to the channel so that you're first to know when Market Monocle research hits, and timely research might actually earn you a few more bucks. Anyways, moving on. The third reason uplisting could boost the share price is that it could bring better and more attractive M&A targets to Hitid. Just think about this from the aspect of companies who want to sell. If I was a compelling company, I'd like to maximize my upside by selling to a company whose share price has the most potential, since most likely the sale would be in the form of both cash and shares. The issue with many M&A for OTC or microcap stocks is the lemon problem. Companies who want to sell usually are doing it for a reason, such as the company being in terrible shape or whatnot. The fourth reason is analyst coverage, and again, I'll just prove the point by showing it to you. Look at the before and after for Village Farms and GrowGen again. The reason why more analysts starts covering after an uplisting is very practical. It just brings in more businesses to their investment banks. There are more trades to be done as there's more volume on the stock, and there's more opportunities for bankers to pitch M&A. At the very least, I find that you can expect 3 to 4 new banks covering the stock after uplistings. For Hitid, I can almost assure you that either Beacon Securities, Roth Canada, or Desjardins Securities will cover the stock within the next 6 months, since if you look at the recent public offering prospectus, these 3 brokers have joined ATB and Echelon Wealth Partners as underwriters. The fifth reason why uplisting is positive is that it gives an opportunity for index inclusions, like joining the Russell small cap indices. The importance of this is often overlooked, but once a stock enters a major index, the implications could be very significant, as it would very likely impact hundreds of different funds that track that particular index, forcing it to at least buy some of its shares to reduce the fund's tracking error. This is what I believed happened to GrowGen stock. One particular category of these funds who probably need to buy stock after it enters an index are ETFs, or exchange traded funds, since they're more often than not track an index. But to clarify, not all ETFs track an index, so it does need to wait for a stock to get on an index before pulling the trigger to buy a stock. For instance, a sector-themed ETF, like a cannabis ETF, can buy as long as it satisfies its mandate and risk perimeters. Interestingly, this is exactly what has happened to Hitid, as it was recently announced that the cannabis ETF, ticker THCX, recently bought 351,000 shares. There are 3 important things about this. 1. ETFs, like I mentioned, generally buys a stock only after it has been uplisted, so the confidence that THCX has to buy Hitid early is very positive. 2. While THCX buying is a good thing, there are actually much bigger sharks in the sea that would probably move the share price much more. After all, THCX is in fact among the smaller cannabis-focused ETFs out there. For instance, the Alternative Harvest ETF with ticker MJ is 10 times as large. And 3, for THCX specifically, I fully expect them to buy more of Hitid since the fund appears to love strong Canadian cannabis retailers. If you look at their second largest holding, it is Fire and Flower, which is Hitid's largest competitor, listed in Canada, and to me, is just not as compelling as Hitid. Additionally, one thing I would like to point out is that ETFs buying are typically done steadily over a few quarters. For instance, for Village Farms International, the ultimate size of the holdings by MJ and THCX are both more than 10 times the initial amounts in its first quarter of purchase. The last reason why an uplisting could boost the share price is that the market could give Hitid some scarcity value, as once HITI trades on the NASDAQ, it will be the first major cannabis retailer anywhere in the world to trade on a major exchange. So then the question becomes, if news is already out there that the company is likely to uplist, why isn't the stock mooning? Well, for several reasons. Uplisting itself is not a magic bullet, and like all the stuff I just said in the last section, it takes time for them to take place. Building a new investor base takes a lot of time. On average, based on my research, there is often a 2 to 3 quarter lag for uplisted stocks to be qualified for index inclusions or attract meaningful institutional buying. Two other reasons why Hitid's share price has been lackluster is that one, market sentiment for cannabis-related stocks has just still been weak generally, and two, a lot of retail investors are still worried about the potential dilution effect of the recent public offering. For this, I don't fault investors for being worried about dilution, as it just means that their investment time horizon is different to mine. But ultimately, this channel is for those who like to invest in high-quality stocks based on fundamental analysis, and so it shouldn't be a major worry as long as the cash raised is deployed in high ROI projects. And so if you think about it, an important benefit of having a stronger institutional investor base is that the stock should be less volatile and reacts less to dilution fears. I'm also going to be very clear here that I fully expect there to be 2 to 3 more public offerings in the next 12 months after being uplisted to the NASDAQ, as that is when a lot of deals and a lot of opportunities come their way, and they will probably need an increasing amount of cash. Alright, so let's wrap up here. What are the key takeaways for this episode? Well, first of all, although Hightide share price has moved sideways in the last 3 months, the company is executing well, and the investment thesis is still completely going as planned. Fundamentals have improved significantly in the last 3 months based on recent events, and that is what is important as investors. I fully expect the share price to re-rate upwards in some form or another in the next 6 months. In this episode, I also highlighted 6 reasons why uplisting to a major share exchange could boost the long-run share price performance, but it takes time for this catalyst to fully unlock. Being listed on the NASDAQ will bring a lot of new opportunities to Hitid, which will result in more fundraisings through private placements or public offerings. You should expect more of these in the next 12 months. Dilution should not be a concern as long as the proceeds are used to accelerate value creation. Management appears to have done a good job thus far. Now, the action to take is that it looks like a great time to add to your position if the stock continues to remain weak and if you have the patience to hold. So that's it for this episode. Thank you for watching. If you liked the video, all I ask is that you like the video, leave a comment below, and hit the subscribe button. Thanks, and I'll talk to you in the next one.